had our very first webinar where we have discussed the topic of trading psychology and understanding yourself on the level of biology, psychology, and self-identity. As part of that, we have discussed how we are going to help you to set your goals and help you establish the roadmap. So, number one, if you haven't watched the webinar and some of the things I will be mentioning you might be confused about, don't worry about it. The webinar has been posted in an announcement channel and you can access it through the link. If you have watched it, that's absolutely phenomenal. So then we can relate back to it and you will exactly know what I am talking about. But this workshop is almost like a continuation, and this is exactly what we are going to do. We are going to have the webinars where I open up a subject to you, and then after a webinar, we will have workshops where we can actually put things into action, and you can receive my support, and I can break it down to you in more detail, which is necessary because sometimes you really need someone to give you a few examples to kind of give you some creative ideas and spark some kind of thinking process. So this is precisely what we will be focusing on. So the reason for your roadmap to success is because, like we have discussed previously, is that, let me see if you can see my mouse. You can see my mouse. People want to get from 0 to 100 almost immediately. And let me just grab a drawing tool here and here. From 0, in order for us to accomplish our goals, actually, what we need to focus on is a step-by-step process. Okay, so step-by-step process is necessary in order for us to achieve what we set ourselves out to achieve. So what we discussed in the last session is that people will want to, for example, at the start of the year, perhaps hit some fitness goals, or they may have trading goals, or they may want to get funded, etc., etc. And they are here, but they want to get to their goal, which is the 100. But what we need to do is, like we have given an example of a GPS, that the GPS is going to give you the roadmap, how to turn, where to turn, what to exactly do to get into your 100. Whereas if you don't have that set out, you could be going at 100 miles per hour and at very high speed, but it is not going to get you there any faster if you don't have clear path of how to get there. Because with a clear path, you are able to actually take pauses, slow down, take your time, and eventually you will get where you need to be. And that way you can also focus more on being process and performance driven rather than seeking that pleasure and dopamine from the market, and only measure yourself in terms of your growth based on the outcome in the market, based on the P&L. What we want you to do is we want you to focus on your performance, how well you did in terms of your morning routine, analysis, in terms of your awareness about your emotion, etc. So actually, I've got another analogy which is very much relatable to this session right now, because the analogy is about actually also driving. So now the reason for your roadmap, so for your long-term goal, is to have a GPS, right? So the GPS is going to get you to, let me just grab another drawing tool. So the GPS is going to get you from 0 to 100 and is going to give you the road, okay? The road where you have the map. However, now what we are going to do in this session, we are going to put you in a car and you will have to drive that road. So this is the purpose of this workshop, of actually putting you in a car and driving you through that road to your 100. Now, if you are confused and if you kind of think, why is she talking about GPS? We're meant to be talking about trading psychology. Maybe you have not watched the webinar yet, but if you do, and then you rewatch this, everything will make sense to you, okay? So I want to put you in a car because now I want you to focus on just few steps ahead of you. So now let's think about this. In our webinar, we said that the roadmap to success is driving from like London to Glasgow, right? And then you need to have your map to know where to turn and what to do. Now we are putting you in a car by creating a long-term goal, and from the long-term goal, breaking it down into milestones, into 30-day plans, and into weekly and daily behaviors, actions, and habits that you need to perform to get you closer to your long-term goal. The reason for that is because we want to induce a sense of self-accomplishment in you, where despite of the outcome in the market, you will know that you are growing and that you are moving forwards and that you are getting closer to where you need to be. Because at the moment, traders think that the only way of measuring their performance and how well they are doing is through the outcome in the markets, which is absolutely not true, because drawdown periods, losing streaks, missed opportunities, as well as take profits are all part of being a full-time trader. So now I'm going to put you in a car, and those of you who are actually drivers, you will really resonate with what I'm trying to tell you. So if you think about it, you are driving from London to Glasgow. So Glasgow is your end location. Glasgow represents your long-term goal. However, as you are driving there, and even though your map is figured out, when you are driving, all you can see is only a few feet ahead of your car, right? So what you are then focusing on, even though you've got the whole map, you know where you are going, you know what turns you are going to take, you still just have to focus on a few meters ahead of you and make sure that you have control over your car, that you swerve other cars, that you stay safe, and that you are continuing going and just focusing on those few meters ahead until you take a turn, few meters ahead until you take a turn, and eventually, as you will be just focusing on little steps of few meters ahead at the time, you will be getting closer and closer to your main location, which is your main goal. So this is precisely why I want you to relate it to as your main goal. But in order for you to get closer and driving that car, you need to, on a daily basis, perform certain mechanics when it comes to your trading psychology, when it comes to your discipline, when it comes to your habits, when it comes to your daily behaviors, when it comes to your daily choices, when it comes to your routines, when it comes to understanding yourself, when it comes to controlling yourself, and understanding what are the triggers in the markets and what you need to do. So this is what this session is dedicated to, for you to be able to really take control of the next step ahead. So the next step is a stable, strong step that you are going to take, and you are going to feel like that again, despite of the outcome in the market, you are going to feel that you are accomplishing what you need to accomplish, right? So let me now switch the screens and share with you my other screen where I can show you the worksheets that we are going to work on. So just bear with me and I'm going to share with you another screen. So here we go. I believe it is this one. It's uploading, and there we are. You should be able to see the main screen. So this is how we are. I'm gonna hide this and I'm gonna click on this, and this is where we are. So now What I want us to focus on is your long-term goal. So in the last session, what I have asked you to do is to think of your long-term goal. Now, if you haven't, you can think about it right now. However, I must say that I don't want it to be kind of a superficial way of thinking about your goals. I really want it to be an in-depth kind of thought about what it is that you want to achieve and how you are going to achieve it. Okay, so the main part was that I asked you about is to think about three main things. That is your desire, what it is that you really, really want. So let's assume it is 100k account with funding pips. Okay, then why do you want it? I have asked you that what it is that you want, okay, and what is your driver. But again, we're not going to do the tip of the iceberg. We are going to do the depth to the information, because the depth of the information of why you're going to get to where you need to be is going to give you daily motivation to stay disciplined. And yes, motivation is an emotion, and emotions can actually help us to grow, and emotions can actually help us to signal certain things for us, and we can utilize them and take them to our advantage. And for example, the drive of why you're doing things that you are doing, of why you're wanting to trade, of why you're wanting to earn more money, why you want to set yourself free from your 9 to 5, why are all of those things that you have set yourself to do, there is a depth and importance to it, and that depth and importance is going to move you forward every single day. And the most important factor here is also do. What do you need to do in order to actually accomplish what you want to accomplish? And here we are assuming that it is the 100k challenge and past funded challenge with funding pips. So what is it I need to do? So this is where the third question is really asking you to look inwards and think, all right, what are the things that actually I should be doing, but I'm not doing yet? Or what are the things that I am good at, but I still have some way of improving in other areas? Am I cultivating enough time to backtest? Am I cultivating enough time to be looking at my charts at the end of the day? Am I cultivating enough time to educate myself more in terms of trading psychology, in terms of risk management, in terms of technicals? Am I good in all of those areas? This is the question that is really going to help you to discover what it is that you need to do. And this question requires from traders to drop their ego and to actually look inwards and think, do you know what? There are ways of me improving. And I will tell you about myself, because I want to be transparent with you. And I want to tell you that myself as well, I am a work in progress. And there are things that I recognize about myself. And the other day I was thinking, okay, I risk 1% per trade, but maybe there is a way where I could spread my risk and maybe go on a 5 minutes time frame for entries instead of 15 minutes, and I could scale my position. So then initially I'm exposing myself to 0.3% risk, and then as I scale up, I could expose myself to more, but then I'm securing some profits on the way. So would that be a smarter way of actually doing it, rather than just slapping one risk and then just, okay, it either works or it doesn't? Maybe. And there is not a right or wrong way of doing it. What I am doing, I am digging in to discover what works, what doesn't work, what can work better. Is that if is the way of scaling my risk going to make me less afraid of entering the trades, or will I be more braver, or actually will it make me more careless because I will be risking less? Or should I stick to the same? Those are all of the questions that are really, really valid. But number one thing that I want to mention here is, first of all, it's very personal. Number two, it is all about the insight that you give to yourself. But number three, it is all about collecting that data to inform myself about the decision making, to be able to see what is actually a better way for me to achieve those things. So this is something that I really want you to think about. And obviously, if you already have, that is absolutely fantastic. But I really want you to think, okay, what do I actually need to do in order to get my 100K account? Okay, I want 100K, and what do I need to do? Well, perhaps what I need to do is I need to spend more time on my trading plan. I'm still not quite sure about my entries, because when it comes to my entries, I always doubt myself. I doubt myself, and then I question, should I enter, should I not enter? So if that is the case, then that gives you an insight that perhaps what you need to do is spend more time working on technicals. Then you may also notice, well, do you know what? I actually can get emotional in the markets, and perhaps working on trading psychology is something that I should be doing. So I should be attending all of those workshops and webinars and actually putting things into action. Then what you could think about yourself, oh, actually what I also need to do, like I always feel really tired in the mornings during my trading sessions, so maybe I actually need to go to sleep earlier. Like, there is not a right or wrong answer. I want you to look at you as a person, your lifestyle. I want you to look at your environment. I want you to look at your choices on the charts, outside of the charts. I want you to look at your circumstances. I want you to look at everything, because there will be things that will be somehow either empowering you or limiting you from getting where you need to be. But also you need to be extremely honest with yourself what it is that you need to do to get that. Okay, so now we're going to move on, and this is where the exciting part starts, because I am going to tell you now the plan. So this is where now we are working backwards. We have the big goal of what we want to achieve, how we want to achieve it. But now, in order to do that, well, like we said, we need to make sure that the goals are measurable, achievable, that they have exact time on it. Because when we actually are working towards something, if you think about it, the things that get measured can get improved. Because if we have no idea about what is going on and whether we are doing well even in the markets, or whether we're doing well ourselves, and if we don't measure it, then we won't be able to improve on it. And moreover, not only that, you may have an amazing month or 3 weeks where you are actually very in control of your own emotions, you're doing well in the markets, but then you may have just one bad week. And what we tend to do, based on the webinar what we have discussed on Sunday, your brain will automatically just focus on the bad. And because of one bad week, you will start being very self-critical. You may have a lot of limiting beliefs pop up. And that is not fair, because then we want to showcase to you and say, no, actually, look, you've got 3 weeks of solid work. Don't worry about 1 week. It's okay. Everybody's feeling off sometimes. Or there might be something going on at your work or with your family. Like, there might be so many different factors, but we want to make sure that we have that awareness and we are understanding it. Another thing, if you think about it, and the reason why we are doing it, is because when you work from 9 to 5, wherever that job might be, there are always some protocols that take place, and there are always rules to follow, and there are policies to follow. And as traders, we don't really have that. As traders, it's just us on our own, and we are our own bosses, we are our own colleagues. We have to have enough within us to criticize ourselves. We have to have enough within us to support ourselves. We have to kind of complement all of those different functions for ourselves in order to succeed as traders. So this is the reason why we need to develop systems. This is the reason why we need to understand our roadmap, where we are going, what we are doing, how we are doing it. And only when we have that full awareness and understanding, we can actually, treat it as a business. Because for me, the frustrating part, especially on social media, is, when people say, you should be treating trading like a business. But I'm thinking to myself, but tell people how. Because it's very easy for everybody to say, you should be disciplined. You should not be experiencing emotions. You should treat it like a business. You should be doing this. You should be doing that. But then nobody's actually given guidance on how to do it. And how to do it is so important, because we want to make sure that you are actually utilizing your time in an effective manner, because your time is precious. Because, a lot of you are trading, working, some of you may have kids, family commitments. There are just so many things that are going on. So we want to ensure that everything is done properly. Now you have to excuse me, but I need to again switch the screen. So true. I'm glad to see positive feedback. So let me stop the stream, and I need to now stream another worksheet. So now we're going to, oh yeah, that's the one. So this is where, with this worksheet, it is really going to get interesting, okay? Because this is where we have our 60-day plan, and this risk the same. Are you going to wait for extra confirmations? How do you establish a pullback? How do you establish your exits? Because perhaps, again, if you are going in line with 4H and you are trading 15 minutes time frame for entries, you could technically target the swing low on 4H. Are you going to target swing low on 4H, or are you going to target 15 minutes? Now, those are important questions, because then you have to honestly ask yourself, what is your emotional capacity? Because technically, if I enter at 4H swing high, I can target 4H swing low, because price in a downtrend should break it. Technically, it should. But I don't know when the price is going to handle. But there will be other times where price will be stuck in consolidation for a few days before it breaks it. And there will be days the price will not break it. Now, the reason why I'm asking you, and the questions that you need to ask yourself, is because it all depends on your emotional capacity. And you need to understand your emotional capacity and build that awareness to fit your risk management around you as a person. So if for you 1-to-1 risk to reward ratio works, great. If 1-to-5 works, great. If 1-to-2 works, great. 1-to-10, you get the gist. It is down to you, down to your skill, and down not only skill, because based on your skill and your trading strategy, you might be able to be getting 1-to-10s. But it is about the person, the trader, because the strategy does not trade itself. It's the trader that is making the decisions. And it is your job to get to know that trader, which is essentially yourself. To be able to tell, do you know what? No, I don't want to sit through pullbacks on 4H. I'd rather to target 15 minutes low and take my piece, and then if there is a pullback, add another position, and then continue trading with additional positions on 15 minutes, rather than get in once and sit through those pullbacks and then wait for the price to get to, swing low. So those are your entries. What are your exits as well? Exits, I tell you one thing, and this is something that is so majorly overlooked, because people think, first of all, about analysis, which is great and it's necessary. And I actually think a lot of traders are very great analysts already. Like a lot of you, when you are going to sit at the charts, you potentially can tell from higher time frame perspective where the price is heading to. Then number two, one of the biggest factors is your entry. And this is where it really takes trial and error to really nail down your entries, because you might be correct about the higher time frame direction, But if you, let's say, enter in on 1 minute time frame and you don't have refined criteria, you may enter 5 times and lose before you actually get your winning trade. Or the price will take you out and then it's going to go into your higher time frame target. So if that is the case, could you swap to 5 minutes entries? Could you swap to 15 minutes entries? Because you could actually capitalize. And at the end of the day, as traders, we want to capitalize. So is there a way of avoiding those things or minimizing those things to actually capitalize of your knowledge of the bias in the markets? So again, all of those questions are really necessary when it comes to risk management, because it's not just risk reward ratio, it's not just a risk per trade, but it is entries. When it comes to entries, it's criteria on different time frames in different scenarios, in line with the trend during the pullback. What is your exit? Why do you target 1 to 5? Why do you target 1 to 2? Do you just target because, well, based on my stop loss size and based on my risk reward, I want to go for 1 to 3. But that 1 to 3 target might be past some really strong level in the market. How do you establish your management of your trade? So there is management part to it within your exit as well. Are you going to take partials? Are you going to go for straight risk reward ratio? Are you going to go break even? When do you go break even? When do you take partials? Are you going to trail? When will you trail? You can be as creative or simple as you want to be, but the most important factor is to be aware, because the worst thing is not to be aware, and some things keep on repeating itself in the market, and your frustration is growing, and you might be getting angrier and angrier and angrier, but you don't know what's going on. So it is all about building that awareness and understanding, okay, why is this happening? Why is that happening? I've never considered this. I've never considered that. Actually, this doesn't matter to me. I will still utilize the same risk for whether it's a pullback trade or whether it's in line with higher time frame direction. Like, all of those things really, really matter, right? So I want you to think about it. So then in your 30-day plan, you have to think, okay, if risk management is important to me, but actually, what are the areas of risk management that I need to strengthen? Then when you think about, okay, trading psychology, what are the areas that I need to strengthen? So let's summarize this and let's say, okay, that the trader realizes, well, I need to nail down my entries. I need to become better at entries during different market conditions. Okay, so that is whether going in line with 4H or going in a pullback. So that is something. And the number 2 is exits. And the trader's like, actually, I sometimes don't know what to do. Should I exit here? Should I take partials? Should I leave it? Then do you know what happens? Every time a trader decides, no, I am not touching my risk reward ratio, every time they say that, they will be either taken out at break even or stop loss. And every time they are going to take partials, the price is going to go to take profit, and then they like, oh, I should have held it. So it's this constant battle that traders are engaged with, because they like, I don't know. And one of the tips that I'm going to give you as well, the best thing that you can do, and this is what I do. I do it. So every single morning, despite coaching, whether that is with you guys, whether that is clients, whether I'm doing something else or I need to go somewhere, 7:30 in the morning, I do my analysis. End of story. That is where I do my analysis, and I look at mainly Euro USD, and then I'm like, okay, where can I enter? What is happening? What is what is going on? So some entries will be easy because it's just kind of like price is clearly going down. I've got here this 15 minutes supply. I'm just gonna set my limit order, and that's it, done. But there will be times there the swing structure on 4H is down whilst the price is coming up, and it's just so complicated. Then I will say to myself, okay, if price comes back and it just built some liquidity, let's say, and then I would say, okay, if price comes back here, I need to see a change of character or sweep of liquidity. And then what I do is I make myself a note, because I get so busy throughout my day sometimes, I forget what I said. So then when my alarm goes off, and I obviously set alarms, when my alarm goes off, I'm like, oh, what should I do here? All right. So then I say, no, I need to see X, Y, and Z. Now, why is that useful? Because as I am analyzing the market, I'm not involved in the market, so I've got more logical outlook. But when the price gets near your entry, this is when you will start getting emotional, because you will have to start making a decision. So if you set your decision ahead of time, this is where you are going to support yourself with those protocols, with those ways of handling certain situations where you'll be like, nope, I said here that I need to see break of structure or change of character, and only then I will start participating in that pullback. Because you know what it is when price gets close to somebody's entry and then there are some rapid movements and volume in the market. This is where trader starts getting nervous. Should I enter? Should I not? Should I just press buy? Like, what should I do? So it is all about making that plan ahead of time. So then that trader can say that to themselves. Okay, then there will be times I am confused and I will be like, I just need to see what the price actually does here. Or I will be like, there is nothing for me. I'll come back during New York session, or I will come back tomorrow. And that is that. So I really want you to kind of break it down. Then I want you to think, well, I get really frustrated, or I get really disappointed, or it might be even something else. You may think, well, actually, what I need to work on is more of positive habits, or I don't journal. I need to improve my journaling. Like, there might be so many different things, but it's all personal to you. And remember, this 30-day milestone of doing those things is going to help you to get to your 60 days. That is going to be phase 1 with funding pips and then actually getting funded. So all of those actions, see how we broke it down backwards from wanting to have a funded account to setting yourself a milestone of accomplishing a phase 1 of phase 2, and then actually thinking, okay, so what are the things I'm struggling with? Okay, risk management, psychology, this, and then actually going in depth. This is the part of psychology I struggle with. This is the part of my trading plan I am not sure about, or maybe I don't even have a trading plan and I should do. Those are the things that I need to think about. This is the risk per trade that I should take. And those are all of those things that I need to think about. So let's move on. So now we're going to make it into actionable thing. So let me just stop streaming and stream again. And this is where the start of the show comes into play. Okay, so we have this. There we go. What have we decided? So let's think about it and let's look back. So we said that that trader decided that they need to improve their risk management, okay? And within the risk management, they need to improve their entries and their exits, okay? And they established that they need to think about their entries during the periods of when the price, let me just make this bigger here, when the price is going in line with the trend and during the pullback, and also exits during price trending and when the price is pulling back. They also decided that they need to improve their trading psychology and specifically their emotions, and start recognizing their emotions and thinking how they can implement things such as, based on the webinar that we have discussed, thought processes, and therefore consciously work on their subconscious mind to tackle some of the self-image things, some of the limiting beliefs, some of the things that they have been taught for years and years and years, and now they need to take that conscious effort into putting things into action on a daily basis to kind of rejiggle things and understanding and those neural connections in the brain to then their conscious to kind of, react on a different level, and for those emotional factors not to be as intense, and therefore their behaviors not to be as self-destructive. So this is where this comes into play. And this is where, when I said to you at the start, what we are doing and what we mentioned during the webinar is that we are creating you a map, a GPS, from getting from London to Glasgow. And that is you having an exact outline of how to get there. But in order for you to get there with that outline, we need a driver with a car, and you are the driver with the car. And as you are the driver with the car, you need to focus on just a few meters ahead of the car. Even though you've got the map, even though you know which turnings to take, you still cannot travel ahead of time. You need to travel in the now, in the present time, and you need to focus on the next few meters ahead of you in order for you to take control of the car, to watch out for the danger, to move closer to the next road and the road after, and the next turn and another turn. And that is going to get you closer to your goal. So this is exactly here where I need you to focus on each day, on the morning, and then on the afternoon, and then on Tuesday just to focus just in the morning, and then just in the afternoon. And I want you to do that in order for you to have that sense of accomplishment that you are working towards. What? Towards that funded account with funding pips. And that is your target for December or within the next 6 months. But then we've established a milestone of phase 1 being passed within 60 days. And then as we understand that, then we understood, well, what are the things that need to be done? And then we broke it down into very fine detail within the category that you feel you need to improve within. And now we are going to put it into action. So as that trader that we have used throughout as an example, and they said, well, I want to improve on my entries. So tell me, guys, in the chat, what do you think a trader can do to improve on their entries in the markets and on their exits? So within the risk management, what can they improve on? Confirmation indicator, okay, confirmation. Wait for retest, perfect. Set alerts and wait for your point of interest. Backtesting, plan your trade, fantastic. On the entries, wait for confirmation. Stay aware of for news events, fantastic. We've got more people typing. Let's take a few more. Refine the zone to lower time frame and wait for confirmation. Price action, live results. As of the Discord chart. Okay, fair enough. But now, okay, all of those examples are fantastic. So now, let's take them on board, okay? So, all right. So we said, well, backtesting. Check the Discord. Check the news event. Check, what else do we have? Live results. Plan your trade. Okay, so then we're building it in. All right, well, how much time do I have in the morning to actually analyze the markets? Well, all right, I'm going to work and I go to work for 9 a.m., let's say. So, London session, and here I'm giving examples of UK time again. At 8 a.m., the London Open opens, and then how can I cultivate the time to actually analyze the markets in peace and quiet, rather than rushing and going on my phone whilst I'm on traffic lights driving, or whilst I am, thank you, Erkan. I just got distracted by your comment, but thank you so much. All of those things, or on the train, or whilst I'm walking. No, I want you to take time. How can you cultivate it? Remember, we want to work on your entries. We want to work on your exits as an example. So what do we want to do? All right, backtest. When can you backtest? Remember what I said to you before. When we jump from 0 to 100 and we would say, right, on Saturday, I'm going to do a big 6-hour backtesting session, your brain will be like, nah, you are tired after all week and you want to spend time with your family, you didn't see your friends, and some excuse will come up and then you'll be like, yeah, I might as well just move it to the next week. I would rather for you to, well, there was a lot of, like, there was a gap in the market, and the next level was not until, this high somewhere here. So I could have actually held that trade all the way up. Okay, can I improve that? Can I do it? How can I help myself to do it? Perhaps what I could do is maybe leave some partials on the table. So let's say your standard target is 1 to 2, but you want to improve yourself and work on getting bigger risk to reward ratio. So how about once price is at 1 to 2, you close 80%, you leave 20%. If price moves in your direction, you are slowly getting your brain used to holding your trades for longer. And so even though it's a small amount, you still took something, you left something, and you are getting your brain used to holding those trades for a longer period of time. So essentially, it's end of day markups. Okay, those end of day markups, those are the things that you could be doing. Let's say, all right, I'm finishing work at 5. By the time I get home is 6. Then I need to eat dinner, speak to my spouse, put children to sleep, But I bet there is some time here and there. I know we all want to relax. I know we do. And it doesn't have to be every day. Okay, 20 minutes back test, or not back test, end of day markups. End of day EOD, we're going to call it. End of day markups. Okay? Can you do them every day? They could eventually, once you get used to them, they may just take you 5 minutes every evening. But when you are scheduling it, I want you to be very specific. At 7 p.m., this is what I'm going to do. Or as soon as the kids fall asleep, I'm going to my charts and I'm just checking out end of day markups and just seeing there was an opportunity here, there was an opportunity here, there was an opportunity here. Okay. To cultivate that time. When it comes to a back test, to, think about your exit and to really strengthen your edge in the market and give you that data and confidence, it may not be possible every day, and you may think, on Wednesdays, my spouse is taking kids to football, so I actually have like an hour or 2 hours to myself. So on Wednesdays at 6 p.m. or 7 p.m., I actually can backtest for half an hour, and then on Fridays, I can do the same, etc. Same with the morning. You can kind of think, okay, what did the trader said also about exits? Okay, so with entries and exits, the trader said, okay, I am going to enter here, and this is my reason. During the analysis, this is my reason. So then you would put on your list, morning analysis, then you would put right on the charts where could be your potential entries and what you are going to wait for when the price gets to that level. And if you enter, how would you exit? So once you get triggered, think, what is my exit plan? Because traders, believe me, don't think about that. They think about analyzing and they think about getting into the trades, but they're not thinking about getting out of those trades. An exit plan is just as important, because without a solid exit plan, there is going to be always that feeling of that wasn't good enough. I could have got more. I could have got this. I could have entered again. Where, for example, to me, what statistically, looking at my data, what I know about myself, if I take one to two trade per day, sometimes I don't because an opportunity doesn't show up, I'm happy. I don't need to trade anymore. I'm done. Because statistically, I know how my data works. At the end of the month, I'll be sweet. I don't need to look for anything more. But I know that based on testing, based on data, I don't feel like jumping into another trade. I don't feel those urges because it is very much established. But I need you to establish that as well. So then those would be the things that you are doing based on what we have discussed before in our webinar as well. We talked about morning routine, and the next topic actually of the webinar is going to be positive habits, which ties in perfectly with everything we have discussed during the webinar and what we're discussing today, and about you building your daily plan and building a morning routine and how you should build new habits. Because as well as that, when it comes to trading psychology, because based on what we have written on those worksheets and what the traders want to get is work on their trading psychology, to start working consciously on the subconscious mind, and therefore start thinking about, okay, how can I get more emotional control? How can I be more aware of what is going on? Because I tell you one thing, and perhaps I said it already in the webinar, I experience emotions as well in the markets. You may think, okay, she traded for 5 years, she's a trading psychology coach, she probably doesn't feel anything. I do, of course I do. I experience emotions, I experience frustration, I experience all of those things. But the point here is, what I call it is that gap of control. I've got a control in between when something happens in the market, the emotion I'm going to experience, and then I've got the emotion and behavior, I've got control in between that. Where majority of the traders experience emotion, immediately they react. And I have, like, imagine strong walls when I actually think, no, I recognize that I am annoyed right now, that, I've made a mistake. Maybe, we will make human mistakes in the markets, wrong entry, wrong this, wrong plan. It happens. And this morning, I've not entered the way I wanted to, and I could feel the frustration growing. Switched my screens, went to the gym. I knew I have to leave my screens, because if I would have stayed, I would have looked for an excuse to get into the trade again. So those are the coping mechanisms that you have to develop for yourself as well, okay? Because that is going to help you. So then, in terms of the morning routine, you may want to start meditation, and it could be literally 5 minutes. 5 minutes meditation. And actually what I'm going to do, I am going to share resources after this session in an announcement channel, and I'm going to share resources for the meditation apps, what you could do in the morning, etc., etc. And in fact, I'm going to write a blog about it as well, so then everything is in one spot. And that could be just 5 minutes, and then 5 minutes meditation. And remember, based on the webinar, putting yourself outside of that comfort zone first thing in the morning, that is going to teach you discipline, etc., etc. And then as we go further, I want you to score yourself at the end of each day. And whether you go -2%, -1%, 2 losses, 3 losses, 4 losses, I don't care. What I care about is you sticking to your morning routine. I care about you sticking to your analysis. I care about you sticking to the plan that you cultivated during your morning analysis, what you're going to wait for when the price gets to a certain level, and then waiting for that and then executing, rather than breaking your plan. What I care about is you scoring yourself based on, I said I will exit here, I will not get greedy, and I will exit like I plan to. I want you to then, score yourself based on, I said I'm going to do end of day markups. It doesn't matter how tired I am. I'm going to spend 5 to 10 minutes just looking at the end of the day at the charts to recognize whether there were better entries, whether there were better exits for my trade. So I want you, even if you have -2% under your name from that day, as long as you have executed according to your plan, according to your routine, according to what you said you need to do, then that is a 10 out of 10 day. I don't want you to ever minimize your efforts or judge your efforts based on the outcome in a day, because losses just happen. I tell you one thing, you could wait, it happens to me, you could wait for a trade, you could do your analysis perfectly, you could plan your entry, you could plan what your potential exit would be, you could wait for that level for hours. You've got the alarm, you're like, oh, I'm ready for this trade. It makes so much sense technically, it makes so much sense, it's unbelievable. And you could wait for it for 6 hours, and price finally gets there. Not only that, it also gives you a confirmation, and you have a break of structure or change of character, and then even another or whatever you want. And only because you stuck to your plan, you've analyzed, you've waited, you don't have the right to expect from the market to win that trade. Because if you do, that's ego driven. You could do all of the things right and still lose that trade. But that, unfortunately, ladies and gentlemen, is a job of a trader. And this is why we need to pay attention to ourselves, to our brains, to our thinking processes, to our emotions, that we need to plan. This is where we need to put management techniques into play. All right, when I experience a stop loss, what do? For me, I need to remove myself from my screens. Move, go away, which is sometimes hard because I would be working here or writing a blog or talking with one of my clients or this or that. Like it's my station, but I need to move myself. And sometimes I utilize my phone, and I'll be talking on the phone elsewhere or doing a different coaching session or whatever. I know I need to, because then the survival system would kick in and I would try to save the situation. So then I do physical exercise, because physical exercise produces endorphins. As it produces endorphins, it reduces my stress. So then when I come back to the charts, I'm clear-minded. I can now re-establish what happened. What mistake have I made? Okay, let's try again during New York session. It's okay. Or let's try again tomorrow. So I want you to think about what are those triggers. How can you break that cycle? I literally had a client who was very reliant on markets making him feel a certain way, and he would literally be watching every move of the market, etc. So we had to replace that dopamine hit. And I said, and he was entering on 15 minutes, so he had to wait for the price to move, etc. So I said, every time you enter, remove yourself from your desk, because he was trading full time, so there was nothing else he needed to do. And during that period, go on TikTok. And this is your dopamine hit. Your phone, not your trade. So he would actually go and just scroll on TikTok, and he was like, this is great, because I receive pleasure that I am seeking from the market. I'm receiving it from somewhere else, and I'm just chilled out and I'm waiting for my alarm to go off. Now, another method was that if he was entering on lower time frames, like 5 minutes, and he was just faster moving and he would get a stop loss straight away, or he didn't manage to walk away, whatever, he would do the physical exercise. He would start doing push-ups and then breathing technique to bring his stress levels down, and then he was not allowed to look at the charts for another hour. So then what he would do is physical exercise, breathing technique, remove himself for an hour to then return, and then to be able to, re-establish what he needs to do. So those are the things that I want you to think about. Long goal, within 60 days, think about what you want to achieve based on that goal. So if it's getting funded, which phase do you want to accomplish by 60 days? What are the things that you can think of that needs to be done? Once you can think of, okay, it's risk management, emotional control, this and that, then move it into 30 days, break it down. What type of emotions, morning routine, this, that, all of those things, and then build it into your daily routine. And I want you to score yourself at the end of every single day, to monitor yourself and to be able to collect data on yourself. Because I tell you one thing, people sometimes ask me, Paulina, how do I increase my win rate? And increasing your win rate is actually not about doing anything more, it's sometimes about doing less. And what you need to do less of is trade, or less of exposure to the charts, etc. What you may recognize in your analysis, you don't do any of those things. And if that is the case, we will look at it and think, why is it? And it may simply just be that by Fridays you are just tired, because you've been working 9 to 5, you've been trading, you've been doing all other things that you have commitments towards, and by Friday you're exhausted. And as we would cut down Friday out of your trading, immediately your win rate would escalate and move upwards. So we are doing this scoring system for you to monitor yourself. So this is also where I want you to, score yourself based on 3 things. Number 1, sticking to your morning routine. Number 2, sticking to your analysis. And number 3, based on your emotions. And I want you to just collect your emotions. I want you to say, today, I felt annoyed. I've been waiting for this trade, never triggered me, went straight to my take profit. I felt so angry. So we recognize the type of emotion. Yes, it's a signal, but then also, what did you do after? And your score, even though you experienced anger and frustration, your score could still be 10 out of 10. Because then you will say, well, I've experienced that emotion, but I didn't act on it. Yes, I've experienced it. It was horrible, but I didn't act on it. I walked away and I preserved my capital. Because as we were saying, what is risk management? Preserving your capital. And you preserving your capital is by your emotions and emotional control. So guys, I will send you those worksheets in an announcement channel. I will send like a wrap up of this session with those worksheets and with some recommendations for the meditation apps and just anything else that you need. So if you would like to ask me any questions, I'm really glad that you enjoyed it. So I'm going to stop the share of my screen, but please ask me anything now. You are welcome, really, really welcome, guys. So let's see what you're gonna tell me. Several people typing. Are you going to do an Audible soon? Your own trading psychology book? Maybe one day. That would be a goal in the future for sure. But the more you know, the more you know you don't know. I've got a long way to go to educate myself, to learn new things, and when the time is right, that's for sure. Risk per trade, again, risk per trade is very, very personal, and it all depends on your emotional control. Like, I'll give you an example. When I was a young trader and I was in the academy, and we were all doing challenges at the same time, and the suggestion was take 1% trade per risk. Take 1 trade per day with 1% risk. And to me, that was terrible based on my personality, because I felt under pressure that I need to look for that golden, perfect setup in a day. And if I don't get it, or if it doesn't show up, I was either too scared to execute. Because I was too scared to execute, I did not execute my setups. And as I then saw that my setup is walking away, I started chasing. So it was terrible. What worked for me, actually at the start, was to just risk 0.3% per trade and to risk 1% per day. So, but that way I was giving myself 3 trades to play with. So that way I had 30 trades in the challenge, and it was almost impossible to blow that account, So again, you have to know about yourself, what works for you, what doesn't. Now at this stage, I understand myself better, and when I do challenges, I would do 1% risk until I would drop, let's say, to -5 in drawdown, which could happen. Statistically, I could take 5 losses in a row over different days on 15 minutes time frame. It could happen. And then I would drop my risk to 0.5%. And then as I work my way back up to -2%, I would go back to 1%. So you really have to have that system for yourself based on what works for you, based on your edge, technical edge, as well as you as a person. Oh, I'm catching up. So hold on, there. How to forget about things that happened with us in the past. That would be a topic for limiting beliefs, and that is something that we will be discussing and talking about in the future. The next topic in a webinar is about positive habits, but then the further one, it would be about limiting beliefs, and there are a set of things that we need to do to essentially rewire our brain to help us free us from those limiting beliefs. So we will be working on that. After getting stopped on first trade, I can't hold second trade to the target. So you're operating out of fear. So again, maybe your risk is too high for the day. Maybe try reducing the risk, and that way you will be able to then take 2 losses in a day, and stuff like that. But I understand it's a natural response, because if you had a losing streak and then you want to hold for the target, actually the risk reward ratio is what is going to help you to get out of the drawdown, but it is really difficult. So perhaps don't watch your trades, just set your alarms and walk away, or lower the risk. Like, you have to play with it to understand what would help you to manage all of those things. How do we overcome the fear of losing and stop overtrading? By implementing disciplined actions into our day outside of the charts, i.e. morning routine, and doing a lot of different things, which should be part of your daily scorecard, and scoring yourself, monitoring yourself, and doing all of those things. If you have fear of losing, perhaps again you might be just trading too much. And interestingly, the fear of losing is making traders lose more money. Once funded, how does the psychology behind when to take a payout work? Like, if I backtest every month the result I get in a payout, I'd like to see, but in reality I don't want to get a bunch of losers. So it's all about risk management. So I tell you about mine. When I do a challenge, I would risk 1%, but when I actually have a funded account, sorry, I need to look up to the camera. When I actually have a funded account, I only risk 0.3% on all of my funded. I don't need no stress. So during challenge, I just do 1%, but during funded, I do less. And that way, I don't feel that pressure on my shoulders of having to be right, having to be this. And it removes a lot of pressure and fear and all of those emotions that would be attached to it. Book recommendations, absolutely. So I know that the most popular are the, Trading in the Zone, etc. But there are other fantastic trading psychology books. And actually, the book that I would recommend the most at the moment for all of you is Atomic Habits by James Clear. Phenomenal, because it really helps you to put actions into place, systems into place, to develop a new way of self-control, of behaving in a certain manner. It's so relatable to what we are talking about right now, our webinar, and the future webinar, because the future webinar actually will be about positive habits. So Atomic Habits by James Clear, I could not recommend it enough. It's absolutely fantastic, because it just explains how things don't just happen. You don't go from 0 to 100. Like, there is a beautiful analogy there about a stone cutter. So he hits the stone 100 times and nothing happens. And when he hits 101st time, the stone splits into 2. But it's not the 101st time that did it, it's the 100 that did it before. And that is so relatable to trading, that when you actually finally make it, you finally have that big payout, you finally feel like, you got the money that you wanted, etc. It's not that one trade that did it, it's the disciplined actions that did it before. And that's what matters the most. Risk percentage per trade of account if risk reward. So I already answered about risk reward, so it's relatable to everybody. How do you overcome the fear of losing? So I also answered that. If you're on a losing streak for a week, what to do? Take it in your stride. And what is very important is for you to understand your edge. So what I would recommend, there are so many now different programs that you could use to backtest. You could do it just on TradingView, but there are also other ones. And backtest 6 months of data. And that 6 months of data is going to show you what to expect out of your trading strategy. So I know, for example, that I may have a losing week during a winning month. So my winning month may contain a break-even week, losing week, and then winning week, and then winning week. So when I experience a losing week, I don't panic because I'm like, oh, it's just part of my edge. Does it feel great? No. But I just had to take it in my stride. Then at the end of the week, I would look at the chart. Did I enter here? Could I have more opportunities? Okay. I'm moving into the next week. So just that. Depression and trading. Thoughts. So do you mean depression caused by trading? Because I don't want to relate on to trade. Okay, what do you advise in such situation? So, what was the question? Most after getting stopped out on the first trade, I can't hold second trade. So I already advised that. Let's see. Yes, the session's recorded. How do you overcome the fear of losing? Again, understanding your edge. It's so key because, so what I understand from my edge, executing on 15 minutes, I understand that I may take statistically 4 to 5 losses in a row. I may have 9 winning trades in a row. I also understand that I may have a losing week. I also understand that I may have a trading opportunity for 3 days. I also understand my average risk reward ratio. So when you understand also, trading psychology is extremely important, but I always repeat it's trading psychology, technicals, and risk management. Those 3 things are as equally important in order for you to succeed as a trader. So you should understand the numbers behind your strategy. Not just working on trading psychology will not help it. You really have to understand numerically, based on your track record, what works and what doesn't work. How do we overcome? Okay, so that is done. How do you help your psychology during drawdowns? I establish whether I have entered according to my plan, and I just go back and look at it. And honestly, I would say, so I had a losing streak not that long ago. I took 6, and I would say 3 out of them were human error. 3 out of them were based on my edge just not working. But those 3, I rushed with my entry. So then I looked. So look, those losing periods or drawdowns are your opportunity to look at it and learn something from it. So I always say, people always say, it's like a paid lesson. You pay a lesson because you pay for it, you lost. But don't let that lesson go to waste by not actually looking into the depth of that lesson you paid. So I want to learn, like, okay, I took losses. What were they based on? Oh, just my edge not working. Or actually, no, you rushed your entries, and I rushed my entries. And because I saw you rushed your entry here, and here, this week I was like, you either enter from that level or you wait for confirmation and you enter from new level. Instead of waiting for the price to move and then me rushing, and it was just not right, Is it advisable to trade in the night if you trade Asia session? Or I don't know actually where you're from. Maybe for you the night is the London session, etc. It really is down to a person. And again, backtesting and understanding yourself. L's aren't losses, they are lessons. They are. Absolutely, they are. Do you trade ICT concepts? No, I trade me. I trade, it's like smart money concepts. It's all 3 letters, isn't it? And ICT, but it's just more everything, and I just filtered out what works for me. What is your best advice for risk management? Data collection, and to really see what is working, what is not. Let's see. So I will send the book name also in the announcement channel. What do you do when you break your rules? Oh, that's a good one. And I actually mentioned that one in a webinar, that you should put yourself in a dungeon. So what I have done before is, because I have been in a drawdown, because I broke my rules, then I would eat porridge for breakfast, lunch and dinner, because I've taken all the privileges away from me and I banned myself from trading, and it worked really well. But genuinely, that is also a signal that if you cannot keep up to your rules, that means your discipline needs working on. And this is where you would cultivate a plan, how to develop your discipline on a daily basis, via your morning routine, by exposing yourself to uncomfortable situations. Because remember, the reason why traders break the rules is because their brains essentially go on the freak out mode and they feel like they need to fix the situation immediately. So that is just your brain's way of coping. So you almost have to teach your brain that it's okay to be in a short-term discomfort for long-term gain, and you can achieve that by actually implementing those challenging things into your day and practicing. It's like a muscle. Our brain is a muscle, and showcasing to your brain that that I don't know what I was saying. In 3% drawdown, any advice? Well, it depends on your rules, on your age. Is 3 losses normal? Is 3 losses not normal? Like, you really have to understand that for yourself. Do you want to drop your risk now? Do you not want to drop your risk, etc.? So I'm going to take a last question and I'm going to move on. So please let me know. Of course I am. Very happy. Last question, trading related. Alright guys, so what we're gonna do is we're gonna wrap this session up. I've been trading for about 5 years now, so yeah, I don't remember exactly the year, so in 2017, 18 I started. 17, yeah. So alright guys, thank you so much for coming to this session. I appreciate you all. It was a great session. I'm going to share everything with you after. All of this is recorded. I would recommend watching the webinar again from Sunday. I would recommend watching this again. I would really recommend diving into those worksheets, creating yourself a plan. Remember, it's going to help you to get to where you need to be, as well as help you monitor yourself. And we are going to work on positive habits on Sunday as part of our webinar. So that is going to be extremely helpful in terms of building your routine. So thank you so much for all of the compliments. I really, really appreciate it, and I'm really glad that you have enjoyed it. So thank you so much, and have a fantastic evening, and I will catch you soon. Take care. Bye-bye.